If one were to define the fundamental nature of the year 2023 succinctly, it would be sentiment. A paradigm shift has occurred on a global scale within the last 4 years, altering the outlooks of investors. As we near the culmination of this calendar year, indications of restoration are beginning to appear, notwithstanding the considerable distance that still lies ahead. With its extensive implementation of security measures, the 2020 pandemic disrupted global economic activities, to recall recent events. In 2021, the global community awoke from a period of dormancy, endeavoring to restore a modicum of normalcy while confronted with substantial obstacles. The debts accumulated by governments continued to loom, and central banks were unprepared for the events that transpired. The EURUSD price traded below the 1.04 level throughout the year, while the market sentiment was the key player. Overall, the technical perspective was towards the euro, as the monthly chart shows a buying pressure above the 20 EMA after forming bottom at the 1.06 area. Meanwhile, the 100-day SMA lacks the directional strength, as the current dynamic resistance is at the 1.12 level, which is above the 1.12 yearly high. Moreover, bulls hold the grip as the current price remains stable above the 1.10 psychological level. The weekly price suggests a bullish continuation, above the 20 and 100-week SMAs, while the flat 200 SMA remains at the 1.11 level. In that case, the psychological level is 1.11 level would be a crucial level to look at, as a bullish bounce is possible from this zone. As per the current price action, the next resistance level for the EURUSD would be at the 1.12 psychological level, which is below the 1.12 swing high. On the bearish side, the US dollar's strength could kick at any time, where the long-term bearish momentum might come after violating the 1.07 level. In that case, the downside trend could extend toward the 1.14 yearly low at any time.